Hello everybody and welcome to the midweek market update from Smack the Markets for the 29th of April. So this week has started to develop a bit of a theme with Aussie strength, Kiwi strength and US dollar weakness. Now that theme seems to be continuing and stabilizing throughout the course of the week, which is sort of quite nice to have some sort of stability in sort of strength and direction for any sort of period longer than a day at the moment. We've also seen, obviously, Alphabet's numbers supporting the market after the close yesterday, so that may well help to stabilize stock markets and stock indices going into the remainder of the week. Also, of course, coming into the second half of the week, particularly on Thursday, the euro is going to be in focus with their euro meetings and interest rate decisions, with particular interest in the bond buying and stimulus programs and any sort of measures and new measures that they're going to put in. So let's have a look at a few markets here that we discussed on Monday and some of the opportunities that we're looking at going into the remainder of the week. Now, if we come to the Dow first of all and take a look at the price action on the 4-hour time frame, on Monday, the market was back here just around that sort of 24,000 level. And we said, well, we're looking at sort of the market breaking through 24, moving up to the highs up here around the sort of 24, 160, 150 sort of zone. The market got there sort of fairly quickly in early trade this week. It's been sort of quite technical since, so it didn't manage to hold above there, which was a little bit surprising. It's now sort of pulled back to 24, found support here, and now we're sitting at the moment just around the 24, 160 area. So from a higher time frame perspective, we're still sort of really on the cusp of this sort of breakout zone up here. And the market needs to sort of get decisively above here in order to start to see some serious headway to the long side. We can see, though, for the past couple of weeks that the market really has been contained within this range. So if we just come out of this and just open this up on the sort of the 8-hour chart first of all, you can see where price is at the moment. So around these sort of current highs, we're certainly sort of getting some pressure building up there from the higher time frame perspectives, but we need to see some sort of decisive break to get out of this range here. Getting above here sees us in for, well, potentially a swing move up here towards the 25,000 to 25,500 area. There's sort of plenty of distance within the sort of long side here. There are also levels around the 25,000 on the lower time frame, so be aware of that. Of course, if the market can't hold above these areas, and Alphabet numbers are certainly going to help, but if the market can't get above these levels, then there is plenty of distance to the short side with some very clear, decisive direction underneath the 24,000 level. So underneath 24 brings us back into that sort of 23,100 sort of price point, which the market has tested so many times before. So the Dow, as well as other US indices, are very much an intraday opportunities for us at the moment, based upon the structures of these higher time frames. If we come and take a look at a couple of other markets that we discussed on Monday, so Aussie against the yen, and again, if we remember, what we were looking for here was opportunities above the 69 level. The market got above 69, as we can see, and the trend has continued to advance. It's not very far at the moment, so it's only sort of 69.50 at the moment. The trend is still intact at this moment in time, and again, it's sort of following suit with the common theme that we're seeing at the moment, which is stability in the strength in the Aussie. So if we take a look at this on the daily, you can see that there is plenty of distance to the long side above this sort of breakout level now, and the market's really sort of cleanly made a clean break of that. So the question is, where could the market run to? And if we just start to come up to the higher time frames here and take a look at the monthly chart, you can see that we've got a bit of a level in here. Even though the market's in a strong short trend, I should say, there's still reasonable distance up to around the sort of 71.80 level. So that's just underneath 72. And you can see that there's quite a well-defined structure point in the market below there. And certainly if the market did get up here, that would take out the overextension that we've seen and bring the market back into a fair value zone. You can see the same structure looking sort of quite neat here on the weekly chart, and again it's looking like there's not an awful lot in the way resisting the market for a move up to that sort of price point. So we're kind of looking for that sort of area at this moment in time, as long as these trends, these intraday trends that we can get positioned on and trade on, stay intact. Now, the other market that we discussed on Monday was Euro against the Kiwi, and this was a short move. Again, if you recall, it was a break of this level, and we're looking for weaker prices here, not all the way down to the sort of 72, but possibly down here to around the sort of 176 sort of area, back into these sort of previous highs. But nevertheless, there is plenty of distance underneath that price point. Now, we've taken some time to get a break of that level. We eventually got it overnight last night, and you can see at the moment we've got its break. It's such a nice strong level. We're looking at any sort of pullbacks into this level back into the zone for positioning, and looking at sort of short opportunities off that to take part in the continuation of this short trend on this market. So with this one is still in play, we're still looking at still liking the price action, and it's probably one of the cleaner markets out there at the moment. Going forward into other markets into the second half of the week, one market that we're keeping an eye on here is cable, and again around this sort of 125 level on cable. So cable's been quite resilient, even though it's had a lot of things to deal with over the past few weeks. You can see at the moment the market is, if we take a look on the weekly chart, you can see the 125 level through here. Again, if the market gets above 125, then we're looking for some long positions to take a bit of a move to the long side. We think there'll be a bit of a swift move, possibly targeting up here to around 128 in extension. That sort of brings it up into this sort of price zone. Now, again, coming down to the lower time frames and taking a look at the 4-hour time frame, you can see the sort of technical structures that the market's sitting in at the moment. 125, the market's not very far away, and we have started to get a long trend here on the 4-hour time frame starting to develop. So with the continued US dollar weakness, if we can get cable above the 125 level, that's the sort of area where we're starting to get interested in new long positions. So there's a few markets there that we're keeping a close eye on going into the second half of the week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.